Good morning. I wanted to make a video just of a quick discussion about what's going on with Colonial Pipeline, which you may or may not have heard was hacked over the weekend, I believe starting on Friday. And even though the hack has ended, I think, as of Tuesday, today, I think the news is a little bit confusing. It has disrupted distribution of specifically gasoline to the eastern part of the United States. I have friends actually in the southeast, and they are having to line up an hour-long lines just to find gas. One particular person said they went out first thing to go get some gas for their car, and were told that the particular gas station was only supplied with an hour's worth of gas. So within the first hour, they were out of gasoline to sell for the day. And so as everybody is scrambling to get the distribution, this is just a distribution issue. So this is a supply issue. And as you might know, as the supply is being throttled, is being pulled back, of course, demand is pushing prices higher. When supply and demand are in balance, you get a price that stays, relatively calm. It stays put. But if you suddenly increase demand, which, let's be honest, as the weather's getting better, as more people are getting vaccinated, people can get out, so people are wanting to go on more trips, so demand is starting to go up. And at the same time, if you shut down the supply, you hobble this pipeline company, so the distribution lines are shut down, then suddenly no one has any gas. So the pressure from the increased demand and the decreased supply suddenly is that prices are going up. And so what does this mean for the stock market? Well, and just a little note here, marketplace.org is one of the best sites, and I'm biased. It comes along, let's try that again. I need some more coffee. It is a program from NPR, National Public Radio, or NPI. I forget which is the exact organizations. Anyway, you can catch it in the Bay Area on KQED Radio 88.5. It's also a podcast. It is really great because since it is public radio, it is relatively ad-free. And I think it's pretty interesting and mostly fairly unbiased. And finding unbiased news is tricksy. And I encourage you to take a look. And, some people, especially if you disagree with me or if you sit really far from me on the political spectrum, you might think that it is biased. But again, I believe you can learn from any source, even if it's biased, as long as you recognize the bias. So I encourage you to look into it, marketplace.org. They have a great podcast. It's just a little nummy, quick half-hour bite of what's going on financially in the world. So I'm going to come over here. Now, MarketWatch does have tons of ads, so you're going to see ads pop up. Ooh, let's buy some flowers. But it had a really great dashboard. Sorry, that's probably very distracting, so let me not do that. This is the crude oil. This is the daily dashboard. This is what's happened to the price. Now, keep in mind, whenever you're looking at a graph, you always need to look at the domain and the range. And this is true outside of math classes too. So you can see right here, it says 1D, which is 1 day, and you can see the times. So they're looking at from yesterday at this time to today at this time. And this is crude oil. This is a particular futures specific to, this is a future market that you look at inside of the United States. There's another big set of contracts that for outside the United States, but this is inside of the United States. So, and what the heck is going on? So what I want to do is, if I can do this without damaging anyone, including myself, let's see if we can go. And I know this is very high tech. I've created a Word document to go over a few of the definitions you might want to use. I did use Investopedia to, double check myself, because I didn't want to give you any, any misleading information. So here are some of the terms that you need. The first one is, what is crude oil? Why are we saying crude oil? Crude as in unrefined. And this is the stuff that gets extracted from the earth. This is, you see the big drills and they pull it out, and Texas is famous for it. But there are oil deposits all over the place. And here in California, we actually have a lot of oil, but most of it is offshore. So it's out in the ocean, and there's constantly fighting over whether or not that would be okay to go and try to take it out of the, out there and possibly disrupt the ecosystem. So there's a lot of fighting there. But basically, crude oil is the stuff that you drill into the earth and pump out. Now, it is generally considered to be measured in barrels, even though it is not actually transported in barrels most of the time anymore. A barrel is what you might think it is. It's a cylindrical container. Frequently it's used in, spy movies and TV shows, police procedurals. It's a rather gruesome way to get rid of a person. In reality, they just don't get used that much, because there are better ways to transport oil. Well, I shouldn't say better, newer. Don't know if they're better. But the important point is that the barrel of oil, a barrel of crude oil, contains 42 gallons. That is the way that people measure it. In the same way that a foot is 12 inches. It's just somebody has decided this is the standard, and it has stuck. Now, what is a futures contract? A futures contract, it basically is you and someone else are getting into a contract, and one of you is agreeing to pay for something in the future. So like, if I would really like a burrito on Tuesday, I might pay you for the right to buy a burrito from you on Tuesday. Sorry, today is Tuesday, next Tuesday. And that would be a futures contract for a burrito. Crude oil futures generally go month by month. They tend, you tend to, the most excitement happens in the coming month, the current and coming month. But you could buy a futures contract for oil in February of next year. So these are contracts that go out quite a long time. Each one is for each monthly delivery date. There is a concept of a spot price. This is the price of a commodity right now. So we've got two different concepts. A futures contract is the price for delivery of a commodity in the future, and the spot price is get it right now. And you could see that that might be different. So for example, right now, given that there's plenty of gas, but there was no good way to get it to anyone, and everyone's running out, the price of gas right now is pretty high. But also some people are concerned, well, what if these current shenanigans are actually causing problems for the future? And so that's causing people to think, maybe I should invest, make sure I've got plenty of oil coming to me next month too, so that I can be sure that I've got it, right? So this is the uncertainty right now causes changes in price in the future. So two terms that are really just odd terms. Financial terms can be really funny. Contango is generally where you want to be. That's the futures price is higher than the spot price, the current price, because usually, well, with inflation, prices go up. But contango can be a word that's used even if it's a little bit higher than it is. So the price of oil right now, if you were to try to go out and buy a barrel of crude oil right now versus the price in the future, if the price in the future is higher, that's contango. And if the price in the future is lower, that's backwardation. And both happen a lot. The prices go up and down. The price of oil and all of its products can be really, what's the word? I'm not stable. I can't think of the word. Chaotic. I can't think of the actual financial term. And I'm sure you're all saying, oh, it's this, and it's not helping because I'm not psychic. But anyway, there's a lot of fluctuations in the oil market. So the prices constantly go up and down, and there are opportunities to make money in either case. So investors who invest in oil futures aren't generally interested in actually having 42 gallons of oil. What they're really interested in is buying a futures contract and then selling it before the expiration date. Now, you can trade futures contracts like you trade Pokemon cards. So you don't have to be anyone who's interested in oil. You just buy a futures contract and wait a little bit. And if you can make money, you sell it to someone else. So these contracts get handed around a bunch. Now, some people who are buying futures contracts for oil are actually going to hold on to them and use them to actually have oil, right? They're actually trying to buy oil in the future. But a lot of people, again, just trading them like Pokemon cards. Now the expiration date comes up, and you can see what happens is as we get closer to the expiration date, which is usually 3 weeks into a month, I think. I think it's usually on a Friday, but again, it depends on the particular contract. If the expiration date comes, you can't trade anymore. You then, especially in the oil industry, you are required to take delivery, which caused something really interesting about a year ago. So people get very excited because everyone's trying to, it's kind of like a game of, I can't think of words today. Oh my goodness, that game when you walk around chairs and someone pulls the chair out and everyone has to try to sit down very quickly when the music ends. You don't want to be the one that's left holding. If you are holding a futures contract, you are required to take delivery of the oil. And that means you have to go to an oil storage facility and like rent out space, like you would rent out space to put your stuff. Like at public storage, you would have to go to an oil storage place unless you happen to have underground oil storage at your house, which is really unusual because it's generally illegal in residential areas because it leads to all sorts of nasties. And then the last word, the last term, the front month, is the one that's happening right now. Now, it won't necessarily be the current month. Right now, I believe, well, yes, actually, I lied. I believe everyone's trading for May right now, if I'm correct. So that's the front month because we haven't gotten to the expiration date yet. And then you'll see also when we switch back to the other page, you'll see there are also prices for all the other months for delivery in June, July, August, September, October, November, December, etc. So let's switch back. Now that we've got that, you can go ahead and you can do a screen share, a screen save of this, or I'll make sure everyone has a copy of this. Let me find. And so here we go. The front month, which I believe this is May, this is the May deadline. You can see prices there's some really interesting things happening. We've got, not a ridiculous amount of volume, but it is higher than the average. And the price, has been going up. But again, remember I said, look at the domain and the range. The range is, on this, it's only ranged about $2 a barrel, which is that is some movement. That's some interesting movement. People have definitely made and lost money today. But I will move this out. We'll look at the whole year. There we go. I was looking for the other months. Here you can see the other contracts. So I believe right now we're in May. Then we've got June. but I may be incorrect. We may be trading June right now. So I apologize. I don't look at Market Watch a lot. But this was a great one to put on my desktop. But so I will have to look into that. But we've got July, August, September, October, et cetera, et cetera, et cetera. So, and you can see that the prices are slightly different. There's some interesting, like if we look forward, prices are very high right now, but in the future, because of certainty, people aren't willing to pay that premium. So the prices are a little bit lower because who knows what's going to be happening in February. It's not obvious that what will be happening, whether we'll be open, whether everyone will be vaccinated, whether we'll be in the middle of winter, so there'll be another shutdown. No one knows for sure. So let's go back up here though, and let me show you some magic. Magie. I want to go to 3 years. They really want me to get flowers. Okay, so notice this. This was an amazing day. And in fact, this chart doesn't really tell the whole story. What happened a year ago was that suddenly the economy was closed. This is April. So now we had gone past the 1 month since a lot of, certainly California and a lot of the rest of the economy had shut down to a certain or greater or lesser degree. People were not driving. A lot of people were working from home. So suddenly people who had been commuting weren't using gas. No one was using gas. And then a very strange thing happened. All the oil storage places filled up. And suddenly we had a situation where if you had a futures contract for oil, you were required to take delivery. And if you, oh, look, Star Wars. And if you were holding that futures contract, you had to find a place to put the oil that wasn't illegal. And I made jokes at the time about like, let's find a swimming pool and let's just put oil in there, but that's not actually legal. And you can't just put it in Tupperware. I mean, a barrel is 42 gallons, which is a significant amount. You can't put it directly into your car. It would kill your car. It's unrefined. And so in fact, although it suggests that the price on this day was $16.94, for a few hours, the price was actually negative. The price went to, I think, as low as negative $30 a barrel. So in other words, people would pay you $30 a barrel to take the gas because there was nowhere to put it. So, and you can see since then, there have been some fits and starts, but generally speaking, and here, what's this? This was the beginning of March. This was very hopeful. Everyone was like, yay, everyone's gonna get out. And then there was like, oh, things are not quite as open as they were going to be. And now we're back in hopeful again. So everyone is hopeful that everyone's gonna get out and drive, fly, use up all of these crude oil products. And so prices, I would expect prices will continue to increase, although it's hard to know. Right now, I think, let me go back to, let's do 5 days. 5 days, you can see that the trend overall was actually down, but this last little bump here, I think is due to the uncertainty of the hack. I think everyone is realizing that if you hack a pipeline, suddenly it disrupts quite a lot of the market. So that's it. Hopefully what I said makes sense, and hopefully you're thinking, yay, I know so much about the stock market right now. And woohoo, go out and learn lots, and I will talk to you later. Take care and math on.